I was about to say, normally we have these beautiful timers, right? But I didn't see it right now. Welcome, everyone, to another exciting Fanoa Tax Essentials webinar. Today's topic is marketplace models, the pros and cons, and some of the common challenges, hopefully with some tips and tricks at the end as well. I'm Rob, Chief Tax Officer here at Fanoa. With me today is Alexander Kobakidze, known to me as Eiko. I'm going to refer to him as Eiko going forward, who is the head of tax technology here.
He keeps on butchering my name.
Yes, as you notice, we did not wait for everyone to join. Normally we do, and I'm also talking a little bit faster than normal, and that's basically because we found out that our slides are quite dense and are covering a lot of material. So in order to go through it all, we can't wait too long. Eiko, any household tips that we need to know?
Yeah, maybe just a quick introduction. For those of you who are joining us for the first time, this platform is called Livestorm. We use it for our webinars. There's some very basic things to know about. If you want to ask questions, there is a questions button at the bottom right-hand corner. That's a direct question to us. It's private. Nobody else will get to see it. You are also encouraged to use the chat functionality in the bottom right as well, which is a little bit more public. Others will be able to see it and interact with your comments. There's also the emojis, of course. We always ask for exactly, somebody's found the emoji button. We always encourage to do emojis. Maybe something to say on the back of what Rob, we have a lot of content today. So even if we don't get to answer your questions, we do have a practice of coming back to that and trying to send responses back by email. So please do ask some questions of us if you are interested. With the density of content, we can't promise that we will answer all of them today live.
Awesome. Thank you. Yeah, and because of that, we added a slide last minute, especially for those that can't stay for the full session. A few upfront key takeaways of today. We're going to talk about marketplace models, but I think if you work in tax, the main takeaway is that you need to understand your business model in great detail. That means you need to know the precise nuances, the contractual relationships of each model in each country that you have, which undoubtedly will change over time. That's really important. The other thing that I think, especially for people working in tax technology, to take away is that you need to look ahead. Without a doubt, things will change in your model, in the way you operate, in the geographical coverage that you have, and that requires you to have scalable technology. Spoiler alert, most tax technology is not made for marketplaces. So what you don't want to do is invest in something and then later on figure out that you have to replace it. I think those are the key ones for me for today, Eiko.
I've got one more. In the event that you're working in tax policy or with governments as well, as can be the case, this is understanding these business models absolutely fundamental when it comes to making new laws and legislations, because misunderstanding how these business models work has already resulted in instances where unintended consequences arise or areas of concern have frankly been entirely missed because of a misunderstanding how these models work. So I just want to say if there are folks who are working the policy side, this is also quite fundamental.
Good point. Okay, let's go. Let's start.
So maybe what we're going to do here, a little more of an introduction as well. It's not as simple as it looks. Like what the business sees is a nice straight road. What tax often sees are a myriad of options to be able to get to the same destination with a lot of red lights and flags and red flags and do not do's along the way. There are three myths that I want to be able to dispel today. Number one is that there is only one type of model. There isn't. We will go through we'll highlight 13. There's north of 20. If we were going to cover all of them, it'll require several hours. But there's not one type of model. There's many of them. The other one is that services are simple, goods are complicated. Yes, it's true. Goods adds complexity to this, but there is a scaling amount of complexity that comes with different types of business models within the services space, and we're going to show that. And then the last thing is that, well, it's just the way it is. I can't do anything about it. So there's a couple of things I think Rob and I will share from our own personal past experience of the things that we wish that we had done sooner towards the end to address some of the issues that we're highlighting today.
Awesome. Cool. Let's start with the very beginning. I know from my own background, which we, by the way, didn't mention, but mine is Uber and coincidentally, Eiko's as well, that a lot of people working even in marketplace companies like Uber, for example, don't really understand the actual contractual model or business model that they work in. So you often hear like, oh, Uber is selling transportation services. Airbnb is, of course, renting out accommodation. Apple is selling apps in the App Store. Well, that's clearly not the case. It's important to remember that the main business of any platform or marketplace is removing friction. That's really what it is. It's facilitating transactions, increasing efficiency of the market as a whole, And removing that friction can mean anything. It could be on the payment side, it could be bringing together the seller and the buyer, so matching, timing, progressing or processing information. I think the conclusion here is really that anyone that works in a marketplace or will work in a marketplace hopefully understands that it's about connecting buyers and sellers, and it's not making the underlying supply that is the business. Does that make sense?
Makes sense to me. And maybe just something to highlight throughout this presentation, what we're going to use is the diagram that you see here, that the platform in green up on top. Oh, yeah. On the left-hand side, you will see the sellers. On the right-hand side, you'll see the consumers. That's how we've laid it out. Hopefully it's clear. We've tried to make it as simple as possible. If you, as I said, if you have things which are confusing, you just type something in the chat and we'll try and explain.
Perfect. Okay, let's start with the basics. The basic, what we call split fee model, is what you see in many marketplaces nowadays. It involves 3 transactions. The main one, of course, is the underlying supply between the seller and the end buyer. Could be a consumer in this case. Whatever that may be. Could be transportation in the case of Uber, for example, it could be anything else for that matter as well. The platform then charges a fee to both the seller and the buyer, which can be qualified and typified in many different ways. We often come across service fees, or if it's percentage-based, a commission fee. We've heard of lead generation and other naming.
Well, you can be very brave and call it intermediation in the EU. So if for those of you who are VAT specialists will understand what I'm hinting at here, but sometimes that can have additional consequences of doing so.
Yes, intermediation has a bit of a different tax treatment in the EU, of course, so that's an important one, but we don't see that often. But in general, good to point out that you have different forms, but at the end, it all comes down to charging a fee to both sides or either side of the equation. So some of them only sell to the seller for consideration, others only to the buyer, but a lot of them these days to both. If you look at this simple model, which is kind of like the most basic one, and you consider the tax consequences or considerations, there's quite a lot going on. First of all, you will need to determine if any taxes apply, of course, to your transactions to the seller and the buyer, to the extent that you have a dual-sided marketplace. And in order to do so, you will need to know the tax registration status, or the tax identity, really, of the seller and the buyer. If only because if you work or operate in a country that has deemed supplier rules or marketplace facilitator rules, that may impact this, of course. So that's kind of like the first step. Understanding the tax identity, as we call it, of both sides is very helpful for tax determination purposes. Underlying transaction, we see a lot of marketplaces taking on tax determination for that main underlying supply as well. In that case, of course, you would also need to know whether any VAT or GST needs to be calculated based on the seller status, registration status. In case of DCTR, which stands for Digital Continuous Transaction Reporting, if I'm not mistaken, in other words, real-time transaction reporting electronically to governments, which is, of course, also known as e-invoicing in many cases, although that's technically not correct, abundant in many countries. In case you want to do that, or have to do that, oftentimes you also need tax identity information to do that properly and make sure that those transactions are accepted by government. Especially if you also do it on behalf of the seller, which is something that we see more and more happening as well. So the platform facilitating that e-invoicing or digital reporting for sellers requires that information as well. Can
I chip in as well to say just
please.
Rounding as well, Rob? It also impacts how you bundle that, how your systems do that. It's important for digital reporting as well as for tax determination. The two of them are interlinked there.
Critical. You need all of the details of both parties for invoice generation, both for your own invoices as well as if you would do that for the underlying transaction, which again happens a lot from a user experience perspective. Payments. Withholding taxes do apply in some countries, a handful to just mention: Mexico, Pakistan, India, Uruguay. These days, EU, Eiko, what have you, Italy?
You have some specific rules, Belgium, Italy, and a handful of others, which apply to the digital and gig economy, the withholding taxes.
But also, again, dependent on the tax identity or the tax registration status of the seller, right? In this case, the recipient of the funds.
Yes, and the business model, because just to flag that was an issue in one of the countries where they introduced a rule targeting gig economy and just missed one of the major players.
Exactly.
The business model was different. Yeah.
And then data sharing, relatively new, but by now common across marketplaces and platforms. You need to report information on your seller population, especially if you have sellers in the EU with DAX 7, but also these days, of course, with the UK, Canada, Australia, New Zealand, more coming soon. And the equivalent, I would say, is 1099s in the US, which have been around forever, of course, already, and just have a lower threshold now, so it's even more relevant. So those are just some considerations for the most plain vanilla kind of model of a marketplace that's out there, which is just a starting point, really. Yep. What happens, Eiko, if we add some more complexity?
So you can add some complexity by making these transactions cross-border. What Rob was describing is often the first considerations that you would have for purely domestic. This often happens, by the way, it's logical or chronological. You start a platform, you connect people in your own domestic market. When you expand, you can either do that by expanding more, again, by launching entities all over wherever, all the markets you operate, or more commonly is that you simply expand your operations within those markets, but still contract out of a single jurisdiction within those parties. So you have cross-border transactions being added from the platform. Everything that Rob said applies. It just becomes more heightened. So your tax identity becomes even more important because now you're having cross-border transactions. What you call in Europe ESS, VAT on electronically supplied services, or VAT on cross-border digital services, or GST on digital cross-border digital services, inbound, as it can be called in other countries. That starts to become a major consideration. As you have also cross-border transactions, those FX rate changes start to play a bit bigger role. Why? Very again, cool. B2B, in most, all of you will probably know a lot of this, but I could for repetition. When you sell cross-border, you may have a registration obligation. In many countries, you don't, because you might only conduct B2B, i.e. the party that you're contracting may have a valid tax ID or other identifiers which are valid to consider the business. And in those cases, you don't need. Not every country operates like that. Now, over 100 countries have VAT on inbound digital services rules. Not every single one of them exempts B2B. Some of them require you still to register after you reach a threshold. In other cases, if you sell one transaction to a consumer, even though you have the majority of B2B, all of your transactions fall in kind of the old version of the, what was it called, Rob? The force of attraction rule, I think is the way that you phrase it.
Beautiful.
You capture those. So ESS rules are going to be there. Deemed reseller becomes more complicated because you typically start off in your home jurisdiction, you expand abroad, and now you have to deal with those rules, potentially in a different language. So some practical difficulties kick in. And on top of that, monitoring the thresholds, of course, and for registration abroad. So that compliance, that just at a high level, that's the kind of complexity that you can see here.
Let's take it one step further.
You're a glutton for punishment, Rob. So let's make it fully cross-border, something that is double cross-border. So everybody's a cross-border. This is not uncommon in particularly digital services platforms. So creator economy. Is that right, Rob? Yeah.
Yeah. I mean, I'm thinking, for example, this is a very tangible example. A lot of the digital economy companies that are operating a marketplace are, of course, utilizing a central principle, right? So they have a central contracting entity or a few across the globe that they use for this. So let's say that you have one in Ireland that is facilitating a transaction between a teacher of whatever in Mexico and a, let's say, end consumer in Canada. Mexico is one of these countries that has, or still for some services, uses the origin principle. So we'll charge Mexican VAT at 16% on whatever transaction. And then Canada, of course, on the B2C side, if it's considered, for example, electronic services, would say, well, actually, you would have to charge local, federal, and or provincial taxes in combination as well. So then you're instantly dealing with double taxation. So that's really hard, especially if you facilitate any of the tax calculations for the underlying sellers, which again, 99% of the times you have to do, because otherwise it just is not a great user experience for the parties that are utilizing your platform. So we see that a lot, more and more actually. And I think here also, Eiko, you already mentioned, but FX rules, VAT, GST, almost without exception, always in local currency, but it may not be the contracting or the actual payment currency. And then you end up having to do that in real time at the prescribed rate and way of finding that rate, which is hard.
Yeah, I think all the things that we mentioned before, when you're sitting in-house at a platform and all the things that you have to now consider for a cross-border transaction, they suddenly start applying to the seller, your platform sellers that operate on there. And the question that often, well, the challenge often is that some of the sellers are large multinationals who would probably know how to conduct those operations themselves if they're operating via a platform. But in many more commonly in other cases, that they are SMEs or individuals who, quite frankly, have very little knowledge of those obligations that they're supposed to keep track of. And therein lies the problem, because those transactions can fall to be, quite frankly, just dealt with wrongly, missing registration obligations, applying the wrong VAT rules, et cetera, et cetera. So I think that's part of the challenge, that just non-compliance on the seller side.
Agree fully. What else drives complexity?
Well, so we've mentioned two already. We've mentioned the cross-border side, so adding some cross-border transactions. We've mentioned that the tax identity of individuals. So you want to be B2B, B2C, C2B, C2C, B2G, C2G. Just reading that out there. Whatever the model that you're applying. Yeah, I'm impressed with myself.
Go on.
There's also, you mentioned e-invoicing and digital reporting, something which it doesn't always impact for cross-border transactions today, but if you're paying attention to VITA and other jurisdictions, Taiwan, Serbia, and others, that those cross-border transactions potentially are already in scope. Yep. Then with the models that we described before, it's not been an issue so far unless you're playing in a fully domestic scenario. In other cases, they start becoming much more difficult. E-invoicing on behalf and self-billing would mean that it's generating those invoices for the underlying transaction. That's legal in some countries. It's not always allowed, by the way, just to flag that's not always possible. So the sellers do have to do their own compliance in some jurisdictions, limited number, but it does work. And self-billing, a nightmare for a lot of companies, because you have to get more information and more permissions to be able to do that. Tax calculations on behalf, if you want to do the tax calc, as Rob already pointed out, and what you mentioned for Mexico and Canada, double taxation. What positions do you take for those calculations of double taxation, or do you simply say I don't believe in double taxation and therefore it doesn't apply?
Yeah, that's actually a good point that I left out. In many cases, there's no clear guidance on this specifically, of course, and then you would have to come up with your own policy, and not only that, but you would have to then code that policy, of course, to make it into some form of tax logic that is applied at scale, and that's often hard. So that's something that definitely comes up a lot.
Yeah, and if you really want to ramp it up further, you can apply some of the things that we also mentioned. So deemed reseller rules becoming more popular, again, part of the package in the European Union. But not only that, there are other jurisdictions which apply that, sometimes targeted to a specific sector, in other cases more widely. There are also data sharing obligations, which I know some of the platforms have been dealing with for several years, but others are being introduced to this new and wonderful world as of last year, and now more and more countries, UK, New Zealand, Canada, Australia, and others, introducing more based on the OECD model rules. My favorite here is cash transactions, because a lot of the times we forget that we imagine the digital and gig economy as one of the frictions that removed, Rob, is being able to pay by card. That's not the case in every single jurisdiction. There are still cash settlements or other forms of payment when it's throughout those transactions. The problem that this creates is not necessarily it's a tax one, but it's also a business one. How do you withhold? There are countries which have withholding rules for platforms, but those platforms, even when they operate under cash transactions, the problem there, of course, is nothing to withhold. When you speak to businesses, there are ways that they figured around out of this. For example, limiting the number of consecutive cash transactions that a particular individual or company or host or whatever the sector is able to do. So you at least have something to withhold from at the end of the day. But quite often that's a challenge still in many jurisdictions that have these cash transactions as well.
Yeah, I actually love this example, because this is one of the situations where you as a tax function can add tremendous value to the business and the margins, right? Because if you don't flag this in time, you'll end up as a company still having to withhold. There's nothing to withhold from, so you have to pay out of pocket to government. And it's hard to then say to your seller, hey, by the way, you still owe me money. So I think getting creative there and advising the business in that way on how to do that is a key value driver for everyone. By the way, maybe just to add, in terms of the unique business cases, I think on the last slide you demonstrated one as well. This is around like the creative ways that we see in practice for marketplaces to keep a balance between supply and demand. They're always looking, of course, for an optimum, for like an equilibrium between supply and demand, because that's when it functions best. And in order to do so, sometimes you want to influence the economics a bit. So you have promotions, discounts, incentive fees, marketing payments, what have you, to either stimulate the buying side or the selling side. But that then has tax consequences as well. And I think that's also where, for example, the self-billing that you mentioned, right? It comes into play a lot, because it's very hard for the seller to say, okay, well, how do I actually invoice the marketplace for something that technically is not even by them considered a service?
I know that, actually, Rob, we can illustrate this point on the next slide.
Okay.
One way to add complexity, of course, is the last one, as we mentioned, is goods. Of course, add physical movement of goods, especially across borders. If you want to really be complicated, add customs and European Union rules to it with triangulation, and you end up in a very complicated situation. But to Rob, to your point, I think we can probably illustrate it using this. If you want, just take a screenshot of this. I don't think we will have the time to go through every single one of these models, but I've tried to list some points below that we can maybe quickly run through of the key ones. Rob, you were mentioning that there are different ways that you can incentivize demand and supply on a particular platform. Business can incentivize demand by usually, the easiest one is offering promotions, discounts, etc. In A/B testing, at least in our past experience, one promotion is favored over another. It results in more of a nudge on the market rather than something else. However, depending on the type of business model you choose, you don't have all of the options open to you. So we started off with a split fee model. But for example, if you look at the top left-hand corner, in not every single platform operates in the split fee. Sometimes they only have one-sided fees. So the original, I call it the original, but a B2B platform will charge the seller what Rob was mentioning, a lead generation fee, a commission or something like that. And then in a B2C transaction, you would charge the consumer. In this situation, it's a lot easier to influence the demand. Why? Because you can drop your own service fees in a much easier way. In the past, it has been favored for example, rather than running promotions, you can just reduce the price from your own fees. Can't do that here. Here you have to third-party consideration. When you start running the VAT and the master this, you will notice that the third-party consideration is not as efficient as a discount, simply by the way the VAT works from a business and the seller and a consumer perspective.
I think you may have lost a part of the audience here. Because this
do you want to explain?
Well, I think, yes. I think these are just models that we see in the wild, basically, right? A handful of them. And if you really want to condense the takeaway here, is that almost all companies end up with differences in their models across geographies for a couple of reasons, right? It could be that there are legal or regulatory considerations. Mm-hmm. Your model just doesn't work, it's not allowed, not legal, what have you. It could be that there are oftentimes also commercial drivers. Let's say that there's a local competitor or a global competitor that already entered the market with a specific model, and that's kind of the baseline. So no one wants to deviate from that purely from a user experience or from a commercial perspective, and you then need to adopt that. But there's also, of course, like tax preferences. Not all models work equally well in each market. You mentioned earlier, right, the cash one for withholding tax purposes. It's not ideal. So you may want to anticipate that and plan around it, basically. So I think the TLDR here is like, look, there are many different models. Each model has their own quirks. We can talk to them all. We don't have the time for it, but keep in mind that you will be confronted with different models in practice over time, right?
Yeah, and this is a subset. So maybe just to reinforce the point, here's another 5, right? 5 more. This is more common within the
multi-party models,
Yeah, multi-party models, typically within I've mentioned couriers, doesn't have to be, but particularly within the courier models. Some of them work differently. For example, the one on the top left has a significant VAT advantage over some of the others, importantly, if you can make your tax engines work to make it work. One of the challenges, maybe this is worthwhile mentioning now, one of the biggest challenges I've had, Rob, is that we can come up as tax advisors in great ways to operate in a market, which is nice and efficient. However, when it comes to implementing these rules within the systems, it becomes much harder. One of the biggest challenges, even when you make the rules work, there are always edge cases. And those edge cases are probably 1 in a million, which when you're scaling up is not such a big problem because they're quite rare. But at scale, particularly with some of the folks who are on the calls today, at scale, that 1 in a million will happen to 10 to 17 times a day.
Yes.
And and they take average ticket costs that what we see for comm support is between $5 and $25. Yeah. So if you start thinking in those terms, why? Because it's a tax issue. How does it work? Where's my invoice? Those kind of issues start to come up. the support tickets come in, and they often have to be escalated across over to the tax.
And I would say forget about the actual dollar impact per ticket, which is of course important, but just from a tax team or tax function, broader resource perspective, right? Also fintech and engineering teams included that need to work on tickets. It's just a waste of time, basically. So you want to make sure that you cover those bases as well. I mean, we can go on this for quite a long time. I think we love it, by the way, those complexities and thinking about them. But the main question is always like, okay, interesting. Now what, right? How do you solve for all of this complexity?
Yeah.
What can you do to actually get somewhere? And I think, from my perspective, lesson learned over time is that the only way for marketplaces / platforms to handle all of this complexity on the tech side at scale is to do it in an automated way. There's just no way that you can do this manually, given the transaction volume, the real-time nature, the global nature of many marketplaces today. There's no way around it. And like I mentioned earlier already, a little bit, a spoiler alert, most even dedicated text technology is not made for marketplace. It's a newer thing, and not a lot of service providers have catered to it yet. So if you do go out to look for a solution, which you'll inevitably have to do, of course, there's the build versus buy conundrum, which we have dealt with in past webinars. But if you do look out for an external solution, or even think about building one, you may want to take a close look at your needs. And I think what we can do, Eiko, is just run through them per area, if you will, in terms of what's most important for folks. And I think that can then hopefully add value to everyone. If we're thinking about tax ID validation, which we mentioned earlier on in the presentation, is critical for basically every angle of the process on a marketplace, you need to make sure that you have a tool that has global coverage, because you're going to be global. If not today, probably soon. So coverage is definitely important. But what's most important is that you don't get a solution that just validates a number or checks the format, because at the end of the day, that doesn't really help you much either. You want to have a source or a tool that can validate against a live source, like a local government database, because that's when you know that the information is accurate and up to date. Very important. For those of you that are potentially operating in the EU, Eiko, I know that you're a fan of what's it called? The
VIS.
VIS.
I love the VIS. I think it's a great solution. Unfortunately, as many of you will know, it's not always up to date, and it's about incomplete. How incomplete? We've got some benchmarks on this. So depending across EU wide, it's about 7% out. But when you start looking at the country level, it becomes more interesting. In some countries, if you validate 10 valid tax IDs, the commission system will return 6 of them as valid, the other 4 invalid. So it's like 40% inaccuracy in some cases versus the local database. So you need to compare both. It's not an inaccuracy. There's some justified reasons why it does that, but particularly when it comes to services and others, you should really use both sources. It will save you a lot of tickets and frustration from your customers, especially on B2B transactions. So get yourself a local validation.
I think when you think about the tax engine, by the way, which is equally important, especially for marketplaces, you need to, first of all, make sure that it covers all marketplace rules clearly. And while that sounds clear, that's typically not the case. So make sure that they cover all 49 plus countries that have these rules today, and make sure that they have a roadmap that covers all that are coming in the next few years, timely as well. You want to also make sure that you have a global engine. Because what we found is that if you have a piecemeal kind of solution with different geographical coverage, it's really hard to deal with the cross-border complexity that we mentioned. Because in these marketplace rules, of course, in these marketplace models, all transactions, one way or another, are influenced by each other. So there's almost like a connectivity that is needed for your tax engine that you won't find in country solutions. So that's important. I think the flexibility here is absolute key. You need an engine that's able to cater to different models per country, per type of business and type of transaction, and that you can change relatively easy. Because as I mentioned, your model will undoubtedly change over time across geography. So that's important as well. I think one other thing that we see, like I mentioned, we see more and more platforms either being held responsible by government through marketplace supplier rules as the deemed supplier of the transaction, or taking on that responsibility themselves by providing basically tax determination for the underlying main supply. Why? Because of user experience. It's just a much more friendly, efficient, and that's one of the core reasons the marketplace exists, ways of doing things. And so we see marketplace taking that on, but that means that you also want to have a tax engine, right, that is able to provide basically tax calculations on behalf of underlying sellers. FX, again, you need to have FX functionality everywhere based on the prescribed source and method, and that's not easy, turns out, because they refresh often. You have many different sources that are prescribed by different countries throughout the world. So the more global you are, the more complicated this is. You want to make sure that you have that as well. E-invoicing and digital continuous transaction reporting, man, what a mouthful. All about coverage, and also making sure that if you do that for your underlying sellers, that you have that capability in the tool. You may wonder, by the way, why you would want to do that for your underlying sellers. But oftentimes, if these obligations apply to sellers on your platform, there's not really any other practical way, because if a transaction is fully facilitated by you as a marketplace, but the underlying taxpayer, i.e. the seller on your platform, needs to report that shortly after electronically to government, how on earth are you going to get that data to them in a structured way for them to then electronically submit that to government? It's just hard.
I think, Rob, even more than that, the experience from my side is that even if you do manage to get that, the compliance rate are still quite low, because if the smaller sellers are, the wider the geographical scope that they're able to cover is.
Yes.
Particularly on that online digital economy where you can have customers all over the world. It's just really hard to get that to be compliant. Yeah. So having in some cases, as you know, some of the larger platforms early 100%. On when these rules kicked in, they took over their obligations. But as soon as you have B2B transactions, it is really painful.
And by the way,
those complaints come in
there fully. Just to chip in there, the larger marketplaces will, especially the ones that we have on the line today, will know that government is going to come to you anyway. They're going to somehow, even if it's formally not the case, they're going to hold you responsible for the what we call hygiene of the ecosystem, right? The compliance levels. So you want to make sure that you're aware of that, and that you, at least from a tax technology perspective, think about it. Quickly, data sharing is the important one, tax filings as well. But data sharing, just very quickly, when we're talking about reporting seller information, it's about capturing the data, making sure that you can do something with the data, which is typically not of the highest quality. So being able to enhance that data, restructure it and reformat it, clean it basically is important. It's also important that you're able to, with your technology, generate seller notifications, typically mandatory, to tell them what you're reporting on their behalf to government. Privacy, really important angle. A lot of tools that we've seen are not privacy compliant, which can create friction with your legal team, if not other external parties. And of course, coverage. You want to have a data sharing tool that's made for not only today, but for the future as well. Tax filings, very quickly. All of these marketplaces in the digital economy end up having these days a lot of local limited VAT registrations, sometimes full VAT registrations, but given that there are digital services on VAT in, 100 plus countries today. Yeah. If you're global, typically you end up with a lot of VAT compliance or GST compliance, sales tax compliance. You want to make sure that you have a tool for that. And in the ideal world, that tool has a dual function in one. It should be a workflow tool, because managing that purely from an organizational perspective is hard. Where do you have to file, by when, what's the cadence, what's the content, what's the payment details, etc. You want to keep central track of that. But you also want to make sure that you're able to ideally streamline the process to generate a lot of these filings automatically, because that's the only way to get to a low to no touch compliance process. And we know, just purely because we speak to 50 plus companies a week, that a lot of companies are working towards minimizing the resources needed for compliance in this context, because it's costly and time consuming, and you don't have a lot of resources basically. So we know of one company that we mentioned on another webinar as well, that does more than 3,000 filings with 3 people per year, which is significant, and that requires a system like this. So
clearly that's not manual.
Exactly. So it's really important to think about that, especially if you're growing as a marketplace, or if you're already confronted with a significant compliance burden. So that's what I would definitely recommend people to consider regardless of what direction they're thinking of, regardless of whether it's now or in the future, of some of the complexity that you'll be faced with, and how to think about it from a technology perspective. Right?
Yep. Yes.
Maybe can we give like a quick summary and share some tips? I think that's really the most important part, basically. We ran through it, by the way. I'm almost out of breath. I think
managed to get most of the way through it so far, folks. So there's only a little bit left.
You know, it's funny. Normally, people have to like put like 1.5x when they re-listen to things. In this case, they'll probably have to slow it down, which you don't often see because we managed to talk so fast. You really have to know your business model in detail. If you work at a marketplace in tax, finance, fintech, make sure that you have that clear, that you know the nuances, both at the highest level as well as at the country level. How do we operate? What do we do? There's tax complexity, I hope that's clear, across the platform on both the platform side, seller side, and buyer side. That needs to be dealt with. And I think what's really important, and I love this about the overall platform economy and these models, is that tax has such a major impact on the actual business for marketplaces. And it's really up to you as a tax team to define whether that's a positive or a negative impact. I don't know of any other type of business where you can have such an imminent and a practical high ROI impact as in marketplace models. But in order to facilitate that all and not become a blocker, you will require dedicated tax technology. That's important to mention because you need to plan for that early on. You need to get stakeholders on board. You need to unlock oftentimes budget as well. But even if you have that, you have to be very clear that most tax technology is not made for marketplaces. So beware of those kind of like items that we mentioned to take into account early on, right?
Yeah, and I've got maybe 4 things to add to that, four practical suggestions that I noted for myself to share today, which was, I wish I had done this sooner, both when Rob and I are working together. I wish some of these we implemented a little bit earlier. One, which is start documenting which models operate where, what the differences are between them. And the reason for that is they are not the same across different markets. Quite often business wants to implement a promotion, a fee, or whatever across multiple different jurisdictions, as you will find, but they will work differently across different markets, and they can't just be done like that, especially if you're operating multiple models across different markets or multiple models within the same tax jurisdiction as well. That of course happens too. The other thing is that I would get ahead with our HR team and figure out when they're hiring in senior business talent, so senior positions, to give them at least an onboarding session for those decision makers, that they get the tax models or the tax implications of the various models that they are looking after and making decisions for. So certainly for senior positions, that they don't underestimate the impact that they can have, and particularly why certain decisions were made. So we did that during the onboarding stages later on, Rob.
Yeah. Critical.
I also love the fact that we created cheat sheets, both for ourselves, for our advisors, as well as for the government stakeholders before we met them, saying, here's how our model operates. Forget everything you've heard on the news or somewhere else or how you imagine it. This is the contractuals. This is how we operate. So at least you have a starting point for discussions, even if people disagree.
Yeah, and maybe just to chip in on that one, we really did that in the most basic way, almost like you see here on the presentation, on the deck that you use, right? Just portraying the actual model with the services that are part of it, and explaining how you operate can help significantly in pre-wiring your counterparty on the opposite side of the table, whether that's in government, advisory, and it will just help everyone get to the point much faster and avoid misunderstandings.
Yep. And then my last point to add to that, which was engage with your tax technology professionals. Maybe it's fintech, whoever's responsible for your invoicing, identity checks, ERP, whichever systems are there, particularly from a point of view of the types of models that you operate today, and even just as a light prediction of how they might evolve in the future, or explaining what there is, so that those individuals can build in flexibility into the tools that they're deploying today, that they don't create throwaway work. There's a phrase in English, a stitch in time saves 9, that you might be able to give them a bit of a heads up that we might expand into this and this directions. Can you tell me which of these directions is going to be blocked for us in the future? So at least you know what I wish we had done that a little bit sooner, because then we would have been able to do some very easy, I wouldn't say easy, but at least some timely changes in our strategy from a tech side that we would have allowed our business to have more options in the future as well.
Yeah,
That's
Very
my
important.
4.
Yeah, fair point. Maybe we can plug very quickly now that we're at it anyway.
Yeah.
At Fanoa, by the way, of course, Eiko and I work on building this technology. That's one of the reasons why we know roughly what it takes and what's helpful. So if you ever need any help, practical advice, we are always happy to share more specific thoughts and ideas on specific marketplace models or specific issues that you may have. I think we can say, and this is the first time that we say that publicly, we're very grateful to work with some major global marketplaces across different industries. Really, this is just a handful here on the screen, but we work with some of the largest companies, really, actually, that are marketplaces in the world, and we're super happy with that. And I think with that, we kind of have covered most of what we needed to cover today within the time. We still have a few minutes left, but that's good.
To answer some of the questions, perhaps, and to say,
if there are any questions, of course.
Is this session recorded?
Yes, I think it is. That's an important one. We will make sure that this session will be public, so that everyone can, especially the ones that joined later. I saw a lot of people joining later. Can listen back.
Yeah, if folks registered to get a recording, that's the feedback I'm getting from our team.
Yeah, exactly. So yeah, with that, thanks everyone for joining us today. But perhaps one thing that's important to mention, our next webinar will actually be this month, if I'm not mistaken. I don't have the date top of mind, but towards the end of the month. That one is going to be fun. Yeah, while you look it up, we will have the pleasure to jam with the tax team at Snap. John, global head of tax there, and Nicola, head of indirect tax, are going to join us to give some insights into how they're organized, how they run their tax business day to day. It's going to be super interesting. A lot of opportunity for questions. Also a lot about the non-technology side of things, so team, etc. But for now, I think this is what we wanted to share with you all on the marketplace side. And like I mentioned, if there are any questions, please do let us know either now or after we end.
I believe it's the 26th, but I need to double check with our
26th.
Team.
Okay.
I think if the team is on the call, please can you add it into the chat so we can share.
Yeah.
We can
share
it
afterwards with the attendees and registrants. Okay, awesome, perfect. Well, Eiko, unless you have anything else to add, I would love to conclude it. Thanks everyone for joining us today.
Back.
Wherever you are, we wish you a great day, whether that's end of day or beginning of day, and hopefully we'll see you next time on one of our webinars.
Thank you so much.
Thanks, everyone. Bye-bye.